And welcome to our second in our 2017-2018 Eden Professional Development webinar series. And in this one, we're focusing on the basics of the National Flood Insurance Program. So I'm Cheryl Scolas with the University of Wisconsin Extension, and I will be moderating today's webinar. As Mark mentioned, please use the Q&A feature for any questions you might have. Our speaker is willing to take questions throughout, so I'll be moderating those questions and we'll bring them up to Allie as appropriate. And we do have time for your questions at the end too. With that, I would like to introduce today's presenter, Allie Bishop. Allie has provided me some background information. She is the Region 7 National Flood Insurance Program Regional Manager. She has been in this role for over 7 years. In addition to her time in this regional manager role, she has more than 17 years of experience with the National Flood Insurance Program, working with write-your-own companies and vendors. She provides training to realtors, agents, leaders, lenders, flood plan administrators, city and state officials. So that means she has presented at a variety of conferences and town hall meetings, getting the word out and helping people understand this very important program. Allie shares that one of her greatest joys is providing assistance and guidance to confused and troubled policyholders by providing ferments and assistance with LOMA process and all aspects of the National Flood Insurance Program. With that, I welcome Allie as our presenter. Let's take a moment to allow her to get her screen share up, and we'll move on with today's webinar.
Well, good afternoon, everyone. Thank you, Cheryl. It's a pleasure to be able to present today for this webinar. Basically, it's going to be the National Flood Insurance Program 101. I'm going to try to keep information at a pretty high level. Like Cheryl said, feel free to ask any questions, and Cheryl will stop me so that I can answer questions as we go along. The first thing I want to talk about is why the National Flood Insurance Program began, when it began. It began in 1968. The act was in response to Congress finding that flooding disasters required a lot more money and a lot more burden to our resources. And it also wanted us to be able to provide preventative and protective measures because the issues that were going on were not adequate to be realistic in covering the flooding that had been occurring and would continue to go in the future. Just a little heads up on the past and future flood risk of the United States. Between 1985 and 2015, the United States suffered more than $300 billion in flood-related damages. Flooding accounts for approximately 85% of all disaster declarations. That includes tornado, earthquake, fire. So we are unfortunately, the highest disaster in America. On average, more people die annually from flooding than any other natural hazard. And we do anticipate that these risks are going to increase over time due to climate change and other threats. Those other threats are building, taking up the green space, that kind of thing. So anytime there's construction, it always has some kind of an impact on flooding. State of the National Flood Insurance Program right now. Right now, the NFIP is $26 billion in debt. And this is due to 3 major storms, Katrina, Irene, and Superstorm Sandy. Right along with that would be Hurricane Harvey that just happened this year. And those costs are just for Hurricane Harvey alone estimated at $26 billion, which is the entire debt of the NFIP at this time. So it was a major storm, major losses. So just kind of keep that in the back of your mind. What the NFIP is trying to do is they're trying to get rid of subsidized policies A subsidized policy is basically an artificially low rate. These are for properties that were built prior to when the flood insurance rate maps were created. It's also, the NFIP is imposing the Homeowners Flood Insurance Affordability Act, or the HFIA rate caps, and they're trying to delay actuarial rating. We also have the newly mapped process to help support rate caps, and they are trying to move towards a more accurate rating through stricter guidelines. We're going to talk about all of that in some future slides, but that's just kind of what's going on with the NFIP. 1994, the National Flood Insurance Reform Act helped strengthen lenders' requirements. What this did was it imposed penalties for noncompliance for lenders. It requires lenders to review the new firms that were coming out. A firm is a flood insurance rate map, for those of you who are unfamiliar with that. So anytime a new map comes out, lenders are required now to do a review and require flood insurance on anyone who has a federally funded loan. It requires notification and mandatory purchase if a firm shows that a structure has been moved into the SFHA. SFHA stands for Special Flood Hazard Area. That's anything with a flood risk zone that starts with an A or a V, as in Victor. It also requires that the lender have an escrow account established if there's other taxes and stuff coming out of their escrow. At this time in 1994, the ICC coverage was included on the standard flood insurance policy. The ICC is increased cost of compliance. This allows up to $30,000 to bring a structure into compliance once they have substantially improved or it's substantially been damaged due to a storm. Why that's important? That's very important because, for instance, with Katrina, when a lot of people suffered flood damage and they pretty much lost everything, in order to rebuild, they had to rebuild at the current standards. So that's why ICC funds are so important. At this time, it also created the Mitigation Grant Program. Mitigation Grant Program is kind of a ride-along between FEMA and a state partner, and what they do is they help give funds also to help mitigate structures so flooding is reduced. The Write Your Own program began in 1983. Basically, it's a co-op between FEMA and a private insurance company, and it allows them to write flood insurance and also administer the plans using their basic administration. So it gives them a little bit of leeway on how they write their business and administer floods for FEMA and the National Flood Insurance Program. I want to talk about some of the myths about the National Flood Insurance Program. I hear these on a daily basis. Basically, it says, who needs flood insurance? Anyone needs flood insurance. Anywhere it can rain, it can flood. I hear people tell me every day, I've lived in this house for 40 years, it's never flooded. A month later, they call me back and say, we had 14 feet of water in our house. A flood can happen anytime, anywhere. The next myth is you can't buy flood insurance immediately before or during a flood. Flood insurance can be purchased at any time. There is usually a 30-day waiting period with a few exceptions. Some of those exceptions are if there's a loan closing, if a map has changed. And the homeowner policies cover flooding. That is not true. Most homeowners and business multi-peril policies do not cover flooding. I do know of a few instances where a homeowner's policy does cover flooding, and that is for like a mobile trailer. But other than that, most homeowners' policies do not cover flooding. Only residents of high-risk areas need to insure their property. That is very false. More than 25% of all the claims to the National Flood Insurance Program are outside of those special flood hazard areas. Flood insurance is only available for homeowners, and that is not true either. Most owners and renters that are located in a participating community are eligible to purchase flood insurance. What that means is as long as someone is in a participating community, flood insurance is available through the National Flood Insurance Program. Flood insurance is not available for purchase if property has been flooded. I hear that a lot. People who go through like Hurricane Harvey did not have flood insurance. They call their insurance agent and say, hey, I want to purchase flood insurance now. Sometimes their agents tell them they can't get flood insurance, and that is absolutely not true. Once again, there is a 30-day waiting period, and the NFIP only covers damage due to flooding. So if the individual does not repair the structure, then any repairs would not be covered. Only residents of high-risk areas need to ensure their, hey, wait, we already did that one. Okay, the NFIP encourages coastal development. The NFIP's primary objective is to guide development away from the high-risk area. We'd like to have communities use green space if possible, use those high-risk areas for parks, for fountains, that kind of thing, areas that will not cause flooding to individuals. The National Flood Insurance Program can only be purchased, National Flood Insurance can only be purchased through the NFIP directly, and that is not true either. Most local insurance agents can write flood insurance and will. The NFIP does not offer any type of basement coverage. I hear this often as well. Well, why do I need flood insurance? You're not going to cover anything because I have a basement. All buildings that are below grade on all sides, that is all four sides, is considered a basement. There is coverage in a basement, but specific personal items are not covered. What it will cover is the most expensive things to replace: structural, electrical, anything having to do with a washer, a dryer, a freezer, the food in it. So it is very limited on contents coverage, but all of your main building components are covered through the National Flood Insurance Program. I hear this a lot. Federal disaster assistance will pay for my flood damage, so I don't need to get a flood policy. Individuals, when Superstorm Sandy hit in New Jersey and New York, I flew there and helped out, was deployed for a while. And while most people had flood insurance policies, thankful, there were some that didn't. And there were some people saying, well, they got their money first before me and I had a flood policy. Well, unfortunately, the maximum that they're going to get is approximately $30,000. A lot of times it comes in the way of an SBA loan. So disaster assistance isn't the way to go. Not to mention the fact if it isn't presidentially declared, there are no federal funds available either. So that's another thing that I always try to reiterate. The NFIP does not cover flooding from hurricanes or overflow of rivers or tidal waters. That is correct. That is not correct. Flooding that meets the definition of a flood will be covered. And I do have that definition for you in a later slide, so I won't go ahead and go over that now. I put this next slide in here so you guys have an understanding of kind of approximate rates. So for instance, this is a property in an A zone, which means it's in a special flood hazard area. These are based on $250,000. It does not include the surcharge, the fees, or the reserve fund assessment. So basically, if you have a structure that's 4 feet below the base flood elevation, and for those of you who do not know what a base flood elevation is, that is basically the line that is determined where the flooding would occur. So as you see on this picture, the BFE on here, that's the line they expect flooding to occur. So as you see on this picture, if there's a structure that is 4 feet below the base flood elevation, their premium would be approximately $8,867 a year. So over 10 years, you're looking at $88,000. It might be in this individual's best interest to try to think about mitigating the structure, elevating it, flood-proofing it, doing what they can to make it be more resistant to water so that it would affect their flood insurance rate. Because as you see, the next person who's right at base flood elevation, they're going to be paying approximately $1,250 a year, or over a 10-year period, $12,510. So you can see the huge difference in premiums. Now you're looking at someone on the very far right, and they are 3 feet above the base flood elevation. So their risk of flooding is going to be quite diminished. They're going to be paying approximately $421 a year. or $4,000 over a 10-year period. I always put this slide in here just so people kind of have an idea of how building smarter can affect not only the safety of your home, but your insurance rates as well. Another thing I like to point out for people is that an NFIP policy is fully transferable. If you have a seller who is selling their home and they have a current flood insurance policy, that policy is transferable to the next person. All they need to do is fill out an endorsement form and provide it before closing date. And what will happen is they will change the name on the policy and keep all the coverages exactly the same. Minimum deductibles for, as you can see here, Figured Waters established new minimum deductibles that this went into effect October of 2013 for a pre-firm subsidized rate. Now what that basically means is this structure was built prior to any flood insurance rate map. They're getting the subsidized rates, which are artificially low. So for a building for a building with coverage up to $100,000, their minimum deductible is going to be $1,500. For any building with $100,000 or more in coverage, their minimum deductible is $2,000. Any others, as you can see, all others would be non-residential, other residential. Their minimums are $1,000 or $1,250 based on the amount of coverage they have. The NFIP's goal is basically to reduce the loss of life and property due to flooding. In special flood hazard areas, we want people to build smarter. We want them to build above the base flood elevation. And as you saw in my slide, the higher you build above the base flood elevation, the lower your premiums are going to be, and the less likely you are to lose your property based on flooding. If you do already have a structure that's already built, retrofitting, wet proofing, elevating, dry proofing, flood proofing. One of the options would be to fill in a basement. I live in Kansas City, so we're kind of in Tornado Alley. And so filling in a basement isn't always an option for us. I did have one individual, her premium was $51,000 a year. She went ahead and filled in her basement and her premium went down to less than $1,000 a year. That's a very extreme measure, but it's one that's just mentioned so people kind of get an idea. We talked about pre-firm. I want to explain to you again what pre-firm is. Pre-firm means that the structure was built before the first flood insurance rate map or before 12/31 of 74. These are policies that are getting those subsidized rates. It's a flat fee based on the occupancy, building, and zone. A post-firm structure is anything built after the first flood insurance rate map or anything built after 12/31 of 74. These post-firm structures should be built into compliance. That means there was an ordinance at the time, and they would have had to build at a certain level to be in compliance. So that's the difference between a pre and post-firm structure. Saving money on flood insurance. There are programs that will help reduce risk and save money on flood insurance. We kind of mentioned a couple of these prior, which was the grant program. FEMA has a grant program that helps rebuild. It helps mitigate structures, elevate them if necessary. Also, we have what is called the Community Rating System, or our CRS. This is basically a program for all the local floodplain administrators and all the different communities for them to earn points to help reduce flood insurance premiums. We've got some communities in Florida who are getting a 45% decrease on all of their premiums based on the things that they've done to increase their CRS levels. Also, another way to lower flood insurance premium is to raise deductibles. But the smartest way to save money, of course, is to build higher and smarter. We have 3 different types of policies. There's actually 4, which is with our GFIP, which is a group flood insurance policy. But we're not going to get into that right now. But we have our standard flood insurance policy. This is for residential and non-residential policies. They have $250,000 maximum or $500,000 maximum for non-residential. We have our Residential Condominium Building Association, or RCBAP, which covers condominiums. There's the RCBAP for a master policy only. We also have an individual condo policy as well. So if there is a master policy, we also offer flood insurance for individual unit owners as well. And then we have our preferred risk policy. This preferred risk policy is in a low risk zone, and it's based on the number of losses. So if there's a structure and they've had more than 3 losses in any amount in the last 10 years, they wouldn't be eligible for our PRP. Granted, their rates would be cheaper because they would be in a standard X zone, but our PRP rates start at about $130 a year for flood insurance premium, and it is a combination of building and contents coverage. Elevation certificates. I'm sure many of you have heard the term an elevation certificate. An elevation certificate is basically a document that provides coverage. That actually provides information based on someone's elevation and in consideration with the base flood. So technically, someone gets an elevation certificate. It could show that they're 3 feet above the base flood elevation. So people use elevation certificates for filing for letters of map amendment. A letter of map amendment, we're going to talk about a little bit later, can actually pull someone out of a special flood hazard area. So they use it for grading purposes. They use it for letters of map amendment. This is documentation to show compliance as well. So if someone's in a post-firm structure, they will need an elevation certificate to prove they were built into compliance. Like I said, it helps support map amendments and determine flood insurance rates. I said earlier that there is a way to lower your flood insurance, and that is to raise your deductible. What they did was they went ahead and offered a high deductible option. They have a $10,000 deductible option for residential property. I always caution people on this. The average flood loss is approximately $30,000. If they have a $10,000 deductible on their building and a $10,000 deductible on their content, that could possibly mean that they only get approximately $10,000 on a claim. So I always caution people when they're thinking about doing the high deductible option, just to be very careful with that. The FEMA surcharge. We talked about this a little earlier. That's the Homeowners Flood Insurance Affordability Act. This was passed by Congress in 2013. What it did was it imposed a surcharge on every policy holder that has a policy through the National Flood Insurance Program. It is trying to basically make the NFIP more fiscally sound and to help offset some of those subsidies that they're offering. For a primary resident or a primary resident condo owner, the FEMA surcharge is $25. For everyone else, every other type of building, it's $250. I put this slide in here. It's called the Community Status Book. If you don't know if a community is participating in the National Flood Insurance Program, it will tell you whether they participate or whether they don't. It'll tell you the date they entered into the NFIP. It will tell you whether it's in the emergency program or not. This is a really good tool. You can actually go to www.fema.gov and type in Community Status Book, and it'll pull this up for you. But it's a really good reference in case you're wanting to know, hey, does my community participate in the National Flood Insurance Program? Could I get a flood insurance policy? Disaster assistance versus an NFIP policy. I know we talked about this a little bit, as I said before. Disaster assistance has got to be presidentially declared, and not very many of our disasters are presidentially declared. The most common disaster assistance comes in the way of an SBA loan, has to be paid back. The average amount of assistance provided is approximately $4,000. And most often you don't qualify unless your home is heavily damaged or destroyed and you are almost destitute financially. If you can get a loan, it always comes in the way of the SBA loan. Now, with an NFIP policy, The average cost of that preferred risk policy starts as low as $129 a year. We talked about this before. Floods are the most common and most costly disaster in the United States, and 60% of all declared disasters are flood related. So that's one of the things you all need to understand too. And then once again, 26% of all flooding, 26% of flooding is probably going to happen for a 30-year mortgage. So that basically means you have a 26% chance in your 30-year mortgage to sustain flooding, and 25 to 30% of all of our claims in the National Flood Insurance Program are in that low to moderate flood risk zone. Real quick, we're going to go through some question and answers that I hear a lot that may answer some of the questions that you have. Where can you buy flood insurance? Any licensed insurance agent usually sells flood insurance. Do you have to be in a flood zone to buy flood insurance? All properties are located in a flood zone. It's just regardless, it's whether it's in a special flood hazard area or a low to moderate flood risk zone, and that will depend on where they're located on the map, and that also determines rates and that kind of thing, and whether someone is required to carry flood insurance or not. Where can you find more information regarding the NFIP? As I said, you can go to www.fema.gov, and you can just type in any keyword in the search function, and it will give you answers or pull up places where you can go. There's also a few, I have some resources on another page that will be helpful for you too. Does a property really need an elevation certificate? All post-firm structures that are located in a special flood hazard area, that's anything starting with an A or a V, will require an elevation certificate. And once again, that's just to prove that it was built into compliance and built into the minimum standards. And then I told you I was going to give you the definition of a flood. The definition of a flood for coverage through the NFIP is a general or temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or 2 or more properties from overflow of inland or tidal waters, unusual rapid accumulation or runoff of surface water from any source, or from mud flow. Basically what that means is, you know, my house flooded, and I'm the only house on the block that flooded, but the sidewalk and the street flooded as well. That sidewalk and that street are owned by different entities, so your home would be considered part of this definition of a flood and should be covered. Is there a minimum coverage requirement for a flood insurance policy? The answer is no. If you do have a federally funded loan and you are in one of these A or V zones, you will be required to carry flood insurance. It'll have to either be the outstanding principal of the loan, the maximum amount available under the NFIP, or the total replacement cost value of your property. There's also a grace period for renewing your NFIP policy, and you have a 29-day grace period because it begins at 12:01 a.m. A basement is any part of a building where all 4 sides are below ground level. And then my last one is, if you have questions, who can you call? You're more than welcome to call me. My contact information is in the slides, and I am completely available. So if anyone has any questions, we still have a few minutes.
Cheryl, you're on mute.
Thank you. So at this time, I don't have any questions in the Q&A. If anybody has a question, if you could submit it through the Q&A. Allie, I know one point of discussion that came up as we were working on planning this webinar was someone asked the question of how does this relate to like farms? So as you've talked about, you know, a household property, what would this mean if I have farm buildings?
Well, if you have farm buildings, and say for instance you have a barn and it is located in a special flood hazard area, you will be required to carry flood insurance on it, more than likely. But like your farmland, your crops, those are not covered through the National Flood Insurance Program. So those would be, you have to find coverage through agricultural avenue. So the NFIP covers buildings, structures. They don't cover fencing or anything like that. They don't cover anything outside that's not in an enclosed area.
So it'd cover like my grain bin or a silo, but
Yes.
not open space.
Yes, and it would also cover the grain inside your silo as well.
Okay, so could you explain a little bit further? I see here in chat, Susan has asked the question, so you have to be in a participating community to get insurance. Can you touched upon about if your community is there, can you further explain that community and insurance connection?
I sure can. Okay, so when the NFIP was created, they knew that they would need local participation in order to make this happen. So what happens is a local participating community sets up the ordinances, and what they have is FEMA has minimum standards that are available for a community to adopt and become a part of the National Flood Insurance Program. Most communities make people build 1 or 2 or even 3 feet above that base flood elevation, so they know that anybody building is going to be safe from flooding. So the local participating community actually monitors the building. They do permitting. They are the ones who help the program move along. In order to join the NFIP, a local community, all they have to do is reach out to their local state partner or to FEMA directly, and they can begin the process.
Okay, does that make sense, Susan? If not, we got another new message coming here. Let me see.
Most communities do participate in the NFIP. There are, I would say, out of 10 communities, maybe 1 or a half don't. So most of them do. And that's because if they don't participate, there's no disaster assistance available. There's no grant money available. If someone has a VA loan, they're not able to get flood insurance. So it really does have a far-reaching impact.
Okay. Let me check. Oh, I see there's a question coming in. How is community defined?
How is a community? Okay, we have some that go by the city, the county. It really depends on that local entity and how they go about filling out the paperwork and actually doing the requirements for the National Flood Insurance Program. So some are boroughs in New York and New Jersey. We have counties who have several different cities that are in one community. We also have cities who are just their own community. So it really depends. There's really no set way.
So the person who asked that question, if it doesn't complete your understanding, feel free to type in another question. Any other questions that we may have? I'm not seeing anything in the Q&A here. Let me switch to the next slide while some additional questions can come in. Oops. So I would just like to remind everybody as we see if there's any additional questions that we'd like to have you complete the survey for today's webinar. You can see the link in the chat box down there, and this is a shortened URL that will take you to a Qualtrics survey. And if you have any additional recommendations for other types of programming that you'd be interested in these professional webinars, please do that. It was looking like I had one more question possibly, and I am trying to get there. Will the slide presentation be available to download?
Cheryl, if you'll share that with me, if Allie's okay with that, we can convert it to a PDF and I can make it available on the Learn event, if that's fine with you all.
Absolutely. Feel free.
Okay, and so another question here was community can be thought of as an area governed by a permit office. Not really a question, it's more a statement. So is that accurate, that a community is more an area governed by a permit office?
If they are willing to do the ordinances and fill out and do all the work, the minimum standards that FEMA desires, then yes, they can be. Like I said, we do have different boroughs that are their own communities as well. So that is correct in a nutshell.
Okay. Let me check the chat box one time as it was looking.
Yeah, do others, if other people can't click that evaluation link, let us know. It seemed it worked for me okay, so I don't know, Cindy, if it's just something.
And it's also up earlier in the chat box too. So here's another question. For homes that don't have a loan on them, how would the homeowner get information on the National Flood Insurance Program? Is this an area that we would need to help educate people about?
This is an area that we do try to educate people, and we do that when maps are changing. We do open houses, we do map outreach meetings, and we do try to explain to people who are not in special flood hazard areas how they can purchase flood insurance. And that is merely by contacting their local insurance agent. I do talk to a lot of agents and do a lot of presentations, and I tell agents this should be something that they at least explain to their folks when they're sitting down and writing a homeowner's policy. It's just to explain that flood insurance is available, what the cost is, and so people understand that it is available.
Okay, I'm just looking here. I'm not seeing any additional questions. I did re-put the link in the chat box without any other words around it. So hopefully that link is now working. Sorry about that one. One last little detail here. Let me get to where I need to be. So I just would like, to thank Allie for giving us this basic background into the National Flood Insurance Program. If you have any questions of Allie, I'm sure she'd be glad to help out in the future. And it also brings up that we have other areas that we can learn related to the National Flood Insurance Program. And having a little challenge here. There we go. So Ellie, thank you very much, and look forward to working with you in the future, hopefully too. I would just
thank you very much.
Yeah, and I would also like to say that as we move from 2017 to 2018, our Eden Professional Webinar series will continue, and we're working on a webinar for January 10th of 2018, and the topic is risk communication. And our presenter who is willing to help us with this one is Sarah Watson with the South Carolina Sea Grant Consortium. So we'll be looking for updates on this information. I will be getting, once we get the recording of this one done, we will be putting it up on the Eden website. We're working on being sure that when we put these up on the website that we have them transcribed in closed caption. So part of our delay in getting the last webinar up and this one is working through that process of how to do that. We have one more question that came in here. Is it FEMA or the Corps of Engineers that determines the flood maps? So Allie, can you help us with that one?
I sure can. There's a lot of information that goes into determining a flood risk map. They use Army Corps of Engineer information. They use LIDAR, they use topography, they use engineers and contractors who know the area. So there's a lot that goes into determining flood insurance rate map.
Okay, so does that, seeing another response to that Q&A, so hopefully that helps out. With that, we'll close today's webinar. And Mark, thank you for all your help and technical support in making our webinars possible. And to everyone that has joined us online today, thank you for taking time to join us on these professional development opportunities. And as we grow and we learn together to help expand our network, this is one way we can do it throughout the year. And with that, I would also like to wish everyone happy holidays as we close out 2017, and that looking forward to 2018. I keep thinking come October, as I'm chair-elect, that my responsibilities to Eden will increase here, but it's been a great opportunity with these webinars. So looking forward to joining you again on January 10th of 2018. See you in the new year. Bye.
Bye-bye.